I'm very glad to welcome the next panel, which is moderated by Orestes Omran from DLA. It's about services agility. The main question is, how do you manage 60 billion and try and resolve them in this lifetime? Orestes, the floor is yours.
Thank you very much, Tasso. Hello, everyone. My name is Orestes Omran. By way of introduction, I'm a partner with DLA Piper and the head of the firm's EU Greek practice. We have been advising on structured finance transactions in Greece for some time now. I'm really happy to be here today with a very distinguished panel of speakers. I think the overall theme of today's discussion will be how do we actually find agility in a consolidated market? And obviously, whoever has acted in the market the past few years knows that there is a trend for consolidation. Started back with Intrum in 2019 with a strategic partnership with Piraeus Bank. Then you've got in early 2021 Alpha Bank selling its Cepal subsidiary, which was a market-leading servicing platform. And then, of course, doValue acquiring Eurobank's servicing platform, again, a few years ago. So you see that consolidation trend coming more and more and more. And of course, that obviously affects servicing activities. And servicers are required to meet new challenges and actually meet the demands of the customers in what is obviously a growing NPL market. I'm very glad, as I said, to be together with distinguished speakers today. And we will be having this conversation. Please feel free to ask us any questions you have at the end of the panel discussion. And I would start actually with Minas. Minas Athanasiadis is he's the country manager of APS Recovery Greece. He has over 30 years of experience in advisory services in corporate finance, real estate, debt restructuring, bankruptcy walkouts, retail collections. He basically has spent 15 years of his time with Bank of America and Hypo Verisbank, member of UniCredit. Then he was for 8 years at Alpha Bank Serbia, where he has held managerial and board position. Before joining APS in Greece, he was the managing partner at Consilia Partners in Serbia. Minas, thank you very much for being together with us today. And my first question to you would be the following. We see, as I mentioned, that the market, the consolidation taking place in the market is gaining more and more pace. And I'm wondering, what are those challenges that you see being in this business for so many years for the servicers to adapt to a more agile business model?
Well, first of all, as a servicer, by nature, you're agile. It's a business entirely based on success. Hence, you cannot afford to sit on your hands. That said, servicing is a low-cost business that seeks to get the maximum of efficiency. Hence, the challenge is how to achieve that. A servicer is challenged to have a state-of-the-art platform, software, systems, and needs to invest a lot in keeping up with the developments and new opportunities, needs to define the right mix, is challenged to define the right mix, how much systems, how much people, needs to define the right mix, what kind of people, needs to define the right mix, how much in-house versus how much BPO, outsourcing, what's the proper scale. So, in a nutshell, if someone needs to address the challenges, it's all of them. Obviously, the more the market gets consolidated in the sense that more and more players are actually fighting over 60 billion of NPLs plus whatever new NPLs will come down the way. It's obvious that the challenge is to invest, to be able to invest in systems, to be able to have access to best practices, to be able to have access to good people, to be able to train people. I guess this is a lot to handle.
Indeed, that's a lot to handle, and I'll keep from what you said, Minal, the right blend, the mix of different kind of services, sub-services internally within your business that needs to be found in order for you to become more agile, and that's very, very important. I'm sure we're going to have the chance to actually discuss more about that sort of blend later on in the discussion. Nikos Vardaramatos, CEO of QQuant Master Servicer, one of the most dynamic servicers in Greece for a number of years now. Nikos has an extensive track record in successful debt portfolio management, strategy formulation, efficient operations design, as well as setting up and managing channels and third-party networks. He has been with the company from an early stage of its formation, having actually co-shaped Quant's strategy up until the company got licensed by the Bank of Greece. He's also a board member of the Hellenic Loan Servicers Association, and prior to his current role, Nikos served as a GM at Eurobank Financial Planning Services, specializing in retail banking, distressed portfolios management, etc. He was there since 2008. Nico, my question to you, obviously, your company has actually developed a number of technology-specific novelties for the servicing per se. My question to you is, how does technology contribute to the agility of a servicer?
Okay. I think there are three main factors that contribute to a smooth operational model for a servicer. These are people, systems, and processes. Looking back a decade ago when the NPL units were part of the banks, smoothness were ensured by the factor of people. So to give you an example, let's say an NPL unit was assigned with a new portfolio perimeter or was undertaking a new project. The solution was to hire more people. The solution was to establish a new team in order to meet the new mandate. However, nowadays, we hear more and more about projects like digital transformation, about optimization, industrialization, robotics. So it is clear that the factor of systems are the important ones. Is clear that technology is in the spotlight. So we believe in Quant not only because of our origin, coming from a Coalco group, but we strongly believe in technology. We believe that to onboard portfolios smoothly, to achieve high recoveries, to improve operational efficiency, you have to invest heavily on technological novelties. And if we speak about technological novelties in the servicing market, there are two streams. One stream is related to back office activities, so improve operational efficiency and thus reduce cost. On the other side, we have novelties related to frontline operations, where exactly we enhance the capacity of a servicer to improve recoveries, to increase recoveries, to increase revenues. So looking back in Quant, we heavily invest currently in 4 main projects, technology-wise. 3 of them are related to frontline operations, 1 of them in back office operations. The 3 of them, 1 is related to portfolio analytics and predictive modeling. So we analyze data in order to reveal how to improve collectability. Second one is related to deployment of a digital portal. We've seen that our debtors are very tired speaking with call center agents, with financial advisors. I'm referring to retail asset class. They are tired about frequency of calls. They are tired about communication script. So we thought that we have to establish an alternative channel through which a debtor can navigate, can by himself pay his debt or restructure his debt. And it's a best practice coming from European market where the efficient servicers achieve more than 10% of their monthly recoveries through this alternative channel like a portal. The third one is we try to utilize public data from open data from public sources. Actually, we apply there machine learning and big data techniques in order to enhance and enrich data coming from our servicing, utilizing this open data in order to become more wise about our customer financial position and in order to provide in this way a viable restructuring solution. And the fourth one is related to back office. There we utilize RPAs, the well-known robotic process automations, where exactly we try to identify repetitive back office activities in order to establish machines, systems, to perform these activities on a daily basis, and thus utilize our headcount to more complicated activities in the day-to-day operations, either it is in the front or on the back end. So it's very important.
Indeed. Thank you very much, Nico. Thank you for sharing with us the 4 ways you are actually trying to use technology to improve agility in the business. I would keep from what you said that reducing costs is very, very important. It's all about the money in that business as well. So making sure you don't discount on the operational abilities of the servicer while reducing costs is very, very important, and that is where technology steps in and tries to actually solve your problems. Hugo Velez, hello. Hi, Hugo. Hugo is the founder, partner, and CEO of HighPodge. Hugo has more than 20 years of experience in the financial sector, 17 in the servicing industry only. He has been involved on the establishment of servicing platforms in different countries, including Spain, Portugal, Brazil, and Greece. He has participated in several NPL and REO transactions. Before joining the NPL and servicing industry, Hugo used to work in the banking industry, and more specifically, he was very much handling securitization transactions. My question to you, Hugo, is the following. We do have right now 4 main servicers that are active in Greece, and they basically handle a large chunk of the market. Do we really need more servicing capacity? Or, on the other hand, would the solution be just outsourcing to other servicers? I think that's one segment of the question I want to ask you, and then I'm going to go on with the second segment of the question.
Okay. So good morning to all. I think you reasoned well. So we basically have a market that has 4 main servicers based on the way that this market has been deleveraging. So if you look to Greece, is a quite unique example when you see other countries like Spain, Portugal, or even Italy, where basically it was the deleverage is being based on huge and mega portfolios, you know. And you end up with these 4 main servicers absorbing all the volumes, which is quite challenging to be very honest, and makes exactly putting that type of question. Are they enough to absorb all these volumes, or they will need to basically have a number of alternatives on the servicing landscape to basically handle a number of activities along the life cycle, you know? And I think, like, for me, the answer is clear. Like, you could not absorb all these huge volumes. Even part of the services that we have here in this market come from carve-outs from banks, which we all know from Italy and Spain, for example, how challenging it is to absorb that structure and put as a special servicing where you need to be much more proactive, aggressive, flexible, you know. So this, for me, clearly answers to the question that, of course, that you will need more servicing solutions for these mega servicers to basically handle all the huge volumes that they are basically absorbing. I never seen a market where main servicers absorb so much volumes, and I think it is unbelievable the job that they are doing, because this is really quite challenging. By other hand, is always what I defend, and that I seen, for example, specifically in Spain, at a certain point, if you really want to put this market quite competitive in terms of pricing, maximizing the portfolio sales from the banks as the typical seller, or even from the actual investors that they will need to do some secondaries and make some exits, you will need to have more servicing capability, because if not, you basically resume the market to what, 4, 5 main investors. And I think this market is so big that of course that needs to have 7, 8, 9 guys looking with different servicing alternatives in order to maximize the price. So I think there is clearly much more space for other servicers aside from these mega ones that are now clearly installed here.
That's very, very useful, and thank you, Hugo, for that. And I appreciate you adding the comparative element with other jurisdictions where basically you have some experience looking at Italy or Spain, for example, as you mentioned, where the same sort of issues came up, and then of course, obviously, the servicing volume needed to be managed, other than by the main, the main players in the market. Would you expect any transactional activity in the secondary market?
Yes, like, again, I'm going to repeat a bit myself, but like this was like a very specific market with huge volumes, where basically if you look to the last 2 years transactions, nothing is less than 1 billion.
Right.
If you go to Spain, which is a huge market, to get a 1 billion transaction, it's one in each 2 years, you know? So it's totally different. So this market was basically entertained creating the servicers, aside from Quant that was original here doing this. But if you look to the other three, Intrum, like doValue and Cepal, they were basically creating these carve-outs.
Right.
So the market was, they were being absorbed by huge volumes, which is quite challenging. And in the middle, we had the situation of the COVID situation. So with all these ingredients, I think everyone knows, and I think if we want to be transparent, we know that part of the portfolios are suffering in terms of performance, exactly by all these situations that we have seen. And based on my experience from these last 20 years, when you are doing asset management, and if you are suffering in terms of performance, at a certain point you will need to accelerate somehow collections. How you do it in so big portfolios? You need to start selecting perimeters of your portfolio and basically do secondaries to make some exits. It's the only way to accelerate collections, and we are here in the market with the securitization, which is quite challenging in order to fulfill the triggers and the ratios that you need to, of performance that you need to achieve. And this makes me believe that even more pressure we will see the market next year to basically create these secondaries. Another thing which I think is usual, but it's already being done here, but I think it will be more and more often, is the low-end sales. You don't need to do a pure secondary as we have, like select a perimeter and sell it, but start identifying some positions, and the asset management team will start looking more proactive in order to start making low-end sales more constantly, because this is part of a usual asset management strategy. So yes, I think next year, I'm pretty confident that it's going to be a very secondary market active here in Greece. I think it's going to be quite interesting.
Thank you, Hugo. That's very interesting. That's sort of tailor-made segmentation of the portfolio in terms of asset management. That might be a solution, a very interesting solution, instead of a traditional transaction whereby you actually just set apart a part of the portfolio and you just sell it.
I have no doubts that that's the way to go.
That's very important indeed. Angelos Angelidis, thank you for being with us. Angelos is the president of the Hellenic Association of Debt Management Companies. He's a senior executive with considerable expertise in international P&L management, business development, and strategic planning. He has over 15 years of experience in senior management positions, business development, obviously, product management, marketing in the EMEA markets. Agile, my question to you, you are part of a very important association, and obviously I always thought of the associations to play a vital role in the relevant industries because they do actually collect the views of a number of market players, and they actually try to enhance their participation in the market and actually lobby and stress what is important and what is not for those players. I'm wondering what is the role of the Hellenic Association of Debt Management Companies overall and specifically in the European distressed market?
Okay, thank you, Orestes. SEDA is the association of the Greek DCA, and together with FENCA, which is the Federation of European National Collection Association, we are on a continuous discussion at a round table with the European Commission in order to lower the gap between the creditors and the debtors during the current pandemic situation and after the post-pandemic situation, of course. So there are a lot of best practices that have been among all the European countries that help and cover several issues that have been adopted also in the Greek market as well. So, such as payment moratoria. We have seen a lot of payment moratoria during the pandemic crisis for consumer and for business loans. And now we can see also for insurance contributions as well. So these measures have helped a lot the market to evolve during the pandemic years. And we are now in a position to see how the flows in the post-pandemic situation will be involved. The first numbers that we have from the collection agencies is that more and more consumer debts are following the new moratoriums adoption, so they are continue to repay their loans at the current level, and we have seen that the NPL different increase in the September, October, for example, latest numbers have been increased with a lower number than expected. So it's in the area of 1-2% increase than that we all believed is a small increase after the post-pandemic situation. The second moratorium is that European Commission also enabling safer cashless payments, and this is one of the technology agility that most of the services and debt collection agencies have to adopt in order to offer to their debtors a more advanced technological way of payments. Still, the cash payment will remain one of the available things in technology, but we have to shift to more technological advantages like the KYC, for example, in order to digitally consign now the new agreements or to offer cashless payment through the use of debit credit cards. The third main best practices is to ensure that all the new loans aiming are mitigating the impact of coronavirus to the business loans especially, and provide the safety net for the businesses to adapt in the post-pandemic situation. And legitimate insurance claim that have to be processed and protected and pay out as quickly as possible. So all these best practices now will follow two roundtables nowadays in the European Commission with consumer and business representatives, European banks, and other lenders in the insurance sector, for example. And all that discussion are part of a wider effort by the European Commission Association to increase lending. It's very special to increase the liquidity in that period in the real economy, and protect the consumer as well. I can say some best practices that have been adopted during the pandemic period from the Greek government, and we have seen the increased forbearance measure, all the moratorium about Gefyra 1, Gefyra 2, Hercules, for example, that have been adopted very fast, both by the Bank of Greece, by the Greek banks, and by the services. We have seen that, and it was discussed in the previous panel, the increased ethics and empathy that has been achieved by the servicer and the collection companies to the debtors, especially during the crisis of the pandemic, We have adjusted all the payments plans so to be more realistic and close as possible to the consumer. And we have suspended mostly 3 to 6 months different payment plans in order to achieve this ethics and empathetic help to the consumer and to the business factor. If you ask me if all these moratoriums have worked, there is clear that yes, it has been worked. The question is what will happen now that most of the moratorium will be stopped gradually until the end of the year. So this is the real question that we have to see in the coming months.
All right, thank you, Agile, thank you very much. Really surprising to me, to be honest, to see that the European Commission is really taking a very proactive look at the relevant market. I always used to think that the Commission is a little bit behind in terms of following up at the EU level the whole NPL problem, and I think what your association in the auspices of FENCA is also doing is something very, very, very important, not only for the companies that you represent, obviously, but also for the consumers, for the debtors, and yeah, that sort of more moral approach to the consumers is something that could very well be the topic of discussion for a different panel. But I really love this approach, and that's also very important because effective collections are also linked to the treatment of your debtors, and that's something very, very important that might even increase efficiencies and effectiveness of the servicers. Mina, back to you. Are there really any opportunities that an agile servicer should consider in that market? We heard Nikos before addressing some of the ways they as Quant are actually looking at the market and trying to improve efficiencies. But what other opportunities do you see in that market so that you can improve it, agility, so that you can actually survive and maybe even dominate that very competitive landscape that we see in the Greek market?
Survive and thrive. That's
True that.
flavor. Secondaries for us, for one, is I believe the potential agile servicers should look at. Of course, the question is how to approach this, how to get the scale, the necessary scale, but foremost the expertise, how to develop the expertise and make this expertise credible to investors that will be purchasing the portfolios. So, one way of achieving that are, no doubt, the horizontal strategic partnerships, in a sense that complementarities actually come together, depending, for instance, on the one being good at the resolution in one or two particular asset classes, the other one complementing this with his own expertise. For sure, the geographical, the horizontal strategic partnership between servicers acting in different geographical areas might be also a possibility to appear credible and agile in this regard and seize opportunities. My favorites are mostly vertical strategic partnerships, where actually new enhancements can come into play. Imagine, for instance, how would it look like if a servicer and a fintech would come together, backed by a private equity fund, developing a whole new way of paying conveniently. This is what debtors like. Nikos said it before. The trend is for debtors in certain asset classes, for instance, to prefer to have the ability to interact themselves, sort of self-service approach, and not to go through a call agent, going through the whole script and all. So imagine that, vertical integration with those players. If you add also a software developer specializing in software development suitable to update the platforms, then you have the perfect match. So vertical integration to meet new challenges. At the end of the day, it's one question how many servicers can survive in this market. I would tend to also reverse the question. How many investors are interested in this market? I hope a lot. For sure, investing in creating the right scale is a challenge, but also an opportunity to independent, agile servicers. Back to you, Orestes.
Thank you, Mina. That's really interesting. I think the message out of what you just said is basically together we thrive at both a horizontal and a vertical level. And that's very, very important because, as you said, there are complementarities to address there. So not only at the horizontal level, but also at the vertical level where you have different segments of the market, different expertise coming together and building up a very sort of joint force to address the challenges of that particular NPL market. And that's something that eventually will make more money for everyone. So it's a win-win situation as long as there is investor interest, as long as you guys can explain that efficiencies to other parts of the market and actually be able to bring in new stakeholders, new investors, new entities to create those synergies. Nico, a question to you. I'm sure that throughout these years you have actually developed your own best practices. Obviously, you know the market, you've serviced quite a few portfolios already, so you know how it is to actually handle that business per se. So you've developed your own best practices, but I'm sure you've also seen the best practices of your competitors or of actually other servicers abroad in other jurisdictions. So my question to you is, what are those best practices and how can those best practices actually increase agility of a servicer?
Okay, on top of technology that I mentioned before, and adding to what Mina said, I would identify 3 areas where the servicers have to invest in order to achieve more effectiveness. These areas, one is an internal, which is have a lean organizational structure. The other 2 has to do with synergies, with outsourcers in the area of real estate servicing and in the area of restructuring more smarter. So going to the first one about lean organizational structure, I strongly believe that the servicers have to have the appropriate capacity in order to run the day-to-day. So they have to introduce technology and specifically digital transformation in order to minimize the capacity required. This is more important for the mega services coming out from the carve-outs of the banks. However, for a medium-sized servicer is equally important in order to be effective and competitive. On the side of synergies, on the real estate servicing, a servicer has to have a very close cooperation with an asset management entity, which actually provides all the necessary operations in order to manage effectively secure portfolios. And when I'm referring to a real estate asset management entity, I'm referring to a company that provides REO advisory. So the services become more wise about the RE collaterals managed in a specific portfolio, facilitate the strategization of selection of REO assets, manage a panel of outsourcers in the area of facility management, of real estate, of technical due diligence, of asset commercialization, and finally support the technical due diligence and onboarding of a collateral that becomes REO. So it's very important. The third one is that we have to think and operate more smart in the area of restructuring. There, I think the servicer has to play the role of a bridge between, let's say, debtor, I'm referring to more to SME corporate secure portfolios and asset classes. So the servicer has to act as a bridge between a credit provider, and I'm not referring only to banks, but also to alternative providers, credit providers, and the debtor to identify more viable solutions, restructuring solutions, mainly through refinancing. So I think this is the only way that a debtor, wherein his loan can be applied such an approach, I mean, refinancing will be the only way to rehabilitate and to return back to the real economy.
Thank you very much, Nico. That's really, really useful. I will keep from what you're saying that basically implementing those best practices never really ends, actually. I think that's very important. You need to keep implementing the best practices and keep actually refiguring out yourselves in terms of how these best practices can be applied to specific portfolios. That's very, very important. And obviously, it does improve agility. Hugo, you did address previously your expertise, and I think that's pretty obvious on the asset management system. My question to you would be at a broader level, maybe, how do you see that relationship between the asset management system? How can the asset management expertise affect the market development on the NPLs? And how do you see the broader organization of servicers to address the conversion of NPLs to REOs?
Mm-hmm. Well, on the first half of your question regarding the asset management system, so I think nobody has doubts that is key for this industry. And at the day of today, with the stage of these portfolios, you need to have, like I was saying in the beginning, on the system side, you basically need to have one unique system that covers from A to Z your life cycle. And I think we all know that if you go to servicer by servicer here, you still have like people with 2-3 systems, because one just do loans, another just do accounting, another one just do real estate, and you need to basically have one unique asset management system that covers from A to Z. That's the first thing. The second thing is, this is a securitization market, so the demanding on the reporting side and data is very, very relevant. And you could not be managing like these massive and huge portfolios if you don't have a system that properly gathering the data and have a potential and powerful reporting tool. You are going to be killed because the requirements of reporting here and being in the securitization is quite challenging. One thing that Nico said, and it's quite relevant, is as the market continue and will at a certain stage get maturity, as always, competitive, fees are going to start going down, are going to be quite more thin, so you need to get efficiencies. Only a good system that creates some intelligence and some automatisms will allow you to reduce costs and get those efficient. So for me, this is like more a message that I think everyone knows, but the question is who has realistically today a system that allow to do what I was mentioning. And I think we, as any market at this stage, most of our competitors, for example, and on the servicers, do not have yet that robust and solid system, let's say. Okay, and this brings me to exactly to that question, which is like, for the first 2 years, so if we move for 4 years ago until last year probably, nobody was taking attention to the real estate and to the REO management, you know, and the systems are in the same place. So I doubt that probably 1 or 2 systems here really have integrated the NPL and the REO management and this part of the life cycle. And I think nobody was taking attention to the real estate. So clearly, if you start looking now that everyone is start being pressured on the auctions and to set up the REO strategy, you start seeing that, as you were saying, if you don't have really the capabilities internally or externally for doing registry, possession, preparing the asset to the market, having a broker to sell the asset, because even you need to build the broker network. So it is something that clearly is going to be key to this market, because I think nobody has now doubts that if you look to any secured market, and this is really a secured market, 70% of your portfolios to 80% will solved via real estate. It is the nature of the business, you know. You are in a deleveraged market, you are in a distressed market, you know. So you don't really get product that is high quality or the most liquid one. So it will then be a real estate strategy. And this is why I was saying that the NPL conversion will be so important and key, you know. And I think still a lot of people are really preparing. And I believe, or I want to believe, that some servicers and some companies now, like you were saying, are really more prepared to advise on the pure REO management that have so many activities. I think next year you're going to see more and more the importance of the real estate management. You know?
Right. Thank you, Hugo. I think what is important is that indeed, as you're saying, until a few years ago, it was not really very common to actually discuss the conversion of an NPL to an REO. So basically the systems, as you said, were customized to address other needs. Nowadays, this is really very hot. So systems need to be customized again and to be able to adapt to the new reality so that we increase efficiencies. Angele, one last question to you before we proceed to the Q&A. As I'm told, we are running out of time. How have the debt collection agencies been organized so far to help servicers perform and achieve their quantitative goals in the Greek market?
Okay, thank you. Most of the collection agencies that SEDA is representing have transformed to the new digital era.
Right.
The collection agency in Greece are a ready, educated force of more than 1,200 collectors right now that are a ready machine in order to implement the strategy of the banks and the services, actually. So we are there, and we have the forces ready in order to communicate all the new strategies and achieve the result for the services. Okay. Most of our people are well educated. We run especially from time to time educational methods or how the scripts are ready, what to implement, how to implement, what are the technology that now has to be enforced in order to achieve better and better numbers. And we have changed the platform in order to adapt to the new digitalization of the post-pandemic era. This is number one. The second thing is that we are a customer-centric methodology approach that we implement in the market that help achieve a better communication with the debtors. Okay, we talk about people, technology, and processes, and all these three we have in our companies in order to especially communicate with the debtor and have face-to-face communication and increase the collection numbers and the cash for the servicers. What has been changed in the last period is that we do not need any more segmentation of the market. What we really need in front of the debtor and in time of the customer is ready, quick decisions and next best actions in order to provide with the debtors a right situation and a right solution. This is what we need more in order to increase the collection numbers back. So the strategy is there to exist, and the strategies changes over the time and adapt to the new situation. But what it really makes a difference is the right and fast decision making by the services, which we communicate back every day, every quarter, every month. We have the tools, we have the force of 1,200 agencies ready to adapt and outsource most of the businesses from the services. This is the power of the collection agency today in Greece.
That's very, very important. Smooth cooperation and communication between servicers and debt collection agencies does really play a very important role. And technology as well, as you mentioned, like adapting to the digitization, the broader digitization of the market is something extremely important as well, also for debt collection agencies. Thank you, Angele. Actually, we do have a few minutes left for questions, so I'd yield the floor to the audience. Anybody who has a question to ask one of our distinguished panelists, please feel free to do so. Please, we have a question by the chairman.
The question is about technology. You mentioned about machine learning and other facets of artificial intelligence. Machine learning is all about data. So you have the technology, you have the algorithms. How do you train it? Do you have open sources? Do you collaborate between you to have a common database to train the data? And how do you propose to take this forward?
Yeah, actually, you know our origin. So we are very experienced in managing data. Actually, we have a new affiliate in our group who actually have the expertise on managing open data from public sources. So the final outcome is to integrate this open data from the public sources into the data produced by the servicing. So the integration of these two give us the ability to do a deep dive in order to identify either better solutions for the debtors or to segment better our portfolios in order to drive operational efficiency and actually effectiveness and better recoveries.
Very good. Thank you very much, Nico. Any questions down there?
Very much, panel. Very fascinating discussion. I have one question in relation to the secondary market. There's been a lot of discussion about how active that market is going to be next year. And my question to the panel is, from your perspective, who is the natural buyer in the secondary market and who is going to be funding those secondary market acquisitions? You may not know, but just interested to hear what your perspectives on that are. Thank you.
Okay, so on my side, the way that I see, like based on pure experience, you're going to have two types of what you could call secondaries. If you are talking about secondaries that have considerable, it's a considerable selection of a perimeter that gets some size and volume, you're going to get the usual credit funds and hedge funds looking to that. It's always a question of a minimum ticket. So as soon as you select a perimeter from these securitizations or true sales that happen in the market, and bear in mind, this is a perfect market for secondaries because 80 to 85% of the portfolios sold were huge. As I was saying, here there is no portfolio that I come that is not at least 1 billion or even more. So selecting perimeters that get size and volume is not going to be difficult, let's say, in commerce. So saying this, I think you're going to have the minimum ticket of investment for basically all the credit funds and hedge funds to look to that. Another thing is the secondaries that I was saying that you're going to start seeing, and I think it is being done already, and we have a number of transactions in fact done, which is going to be more what we call loan sales, but more in the single names. And that it is different. So depending on the type of position, you could have even some local investors, more guys real estate oriented, that will start be looking to those positions. So for example, on hotels, which is an asset class here that is quite exposed, you are already seeing some guys buying some specific single names with a real estate strategy orientation to the collateral, you know. So this is, for me, it is a clear secondary market, and the good thing for bringing more credit funds and more hedge funds is that you have the size on the portfolios. It is quite easy to select the perimeter from different portfolios here that you achieve immediately a very good minimum ticket level, you know.
Thank you very much. Unless there are any further questions, which I see none, I would actually round this up. Thanking very much all our panelists.
Thank you.
It was very interesting, I believe, for everybody in the audience to hear your views on the agility of the servicers in what is a very changing market. I hope you enjoyed that, and thank you very much again.
Thank you.
Thank you.